Hi, thanks so much for watching. Today's concept, we're going to focus on something that's a really great alternative to a minimum funded UL for your clients. Now, UL is a great, maybe it's for a younger client who's sort of transitioning away from term insurance, looking for permanent, but, wants to see some value too. One of the drawbacks, again, on some of these minimum funded UL products is that if you miss a premium, it's completely gone, or that they have no cash value. I'm illustrating this using life design analysis. Again, if you're not familiar with the concept, sign up free, and again, you can kind of present this with your clients. We don't even ask for credit card on sign up, so start your 30-day free trial if you haven't tried it before. Again, I'm going to log into my account here. This is the Elite account we're looking at today. I'm going to create a new case for our client. And I'm going to use a client, just a 40-year-old male, and I've created one here, Jason Forrest. So I'm going to hit continue. As you can see, this is a 40-year-old male. Now, again, this concept works with really any of your clients, but I find it's particularly valuable for younger clients. Maybe they are considering permanent insurance at this stage of their life. Clients of this age, certainly younger ones today, like to see value and they like to see options. So we're going to compare a couple different things for them and really try and highlight some good value and some, a better strategy that offers some flexibility. I'm going to focus on $1 million of insurance benefit, but again, you can use this concept for any kind of age group. So the first thing I want to do is, again, we know our client and we're trying to sell them on some permanent insurance, or we know they have a need for permanent insurance. Maybe they're out of that term stage. Maybe, they've got through even one term product and said, I want something that's going to be there for life, and I'm making some money now, so it's a good time to lock in and really protect our future. So again, I'm just going to search the market here using our Life Guide integrated rates. And if you do Life Guide, if you have a subscription, you're going to get a 50% discount to our software. I'm just looking for minimum funded here, and I'm searching out of my preferred companies. Again, I'm just going to go with the top company out there. Avari, Manulife, both are good companies. Actually, I kind of prefer this Manulife UL, so I'm going to add that to the case. And you can see it's $8,370, and that's going to be level for life. Now, maybe my client Jason here has expressed that he wants some flexibility, or he wants some additional benefits. So what I really want to do is I want to compare it to a really neat product then, and this is, again, a great strategy for someone who maybe can't afford full paid up editions, but is still looking for a little bit, more value. What I'm going to do is I'm going to add a Forrester's Whole Life here. And, specifically, I'm going to focus on their economy product. And they have this, again, I'm going to show you here. I'm just launching into the Forrester software here. Again, you can see I've set up a 40-year-old male non-smoker. I'm using the enhanced coverage option, or the enhanced insurance option, as opposed to the paid up editions. And again, this is a very strong product from Forrester's. I'm keeping it at $1 million, and I'm just going with their recommended split of $418,000 of basic, $582,000 of additional. Now, the neat thing that I've done is I've actually turned this into a 20 pay, and that's where I'm hoping to really kind of add long-term cost savings. After that 20th year, when we offset the premium, we're going to, hopefully ideally beat it on a cost basis, but there's also going to be some cash value too associated with this, because again, it's going to have a little bit of, that enhanced insurance. So what I'm going to do here is I'm going to export my quote to Excel. So once you create it exactly like you like, again, you can add things like term riders, and you can really add some extra detail to really kind of customize this to fit your client's needs. So again, if they can't even, maybe if it's not affording the full base of insurance, you could even add term riders to this. Again, you can see it's going to push out my quote and all those details about this this policy to an Excel sheet. Again, you don't really have to worry about all this. Basically, the only thing we want to do is actually select everything, and I'm going to use the Control-C and copy this. Again, you could save this as a CSV. There's many ways to do this and get this information into LDA. That's really all I need. It takes all that data, and again, I'm using this paste spreadsheet data, so I'm going to click paste spreadsheet here and drop that whole data in the box. And again, I'm just going to upload it. It doesn't look like there's anything there. That's fine. It's actually, the system's actually expecting it. The other thing I want to do is I want to be really specific about my name here, so I'm not just going to say this is Forrester's Whole Life. I want to give it a very specific name, so I'm going to say this is Advantage Plus Enhanced Insurance Options. I'll just call it Enhanced Whole Life. And I'm going to say this is a 20-year planned premium. So you can really give any kind of description in there that really adds to the detail of the case. And I'm going to save that. Now, the other thing is I don't want to just analyze it to age 85. Clients are living longer these days, so I'm going to push that out to age 99. And again, I really want to highlight, here are two different options for permanent insurance, but I want to show why this one product might be a little bit more valuable in the long term. So let's generate the report and take a look and see how it looks. And again, this is a great strategy for your your younger, more professional clients who are just getting to that stage of life where, again, they can afford a little bit more, but we want to highlight some value too. Okay, so right off the bat, again, we've got our minimum funded UL here from Manulife, 8,370, and that's just the bare minimum. It's just going to be level for life years 1 to 59. Now, on the other hand, we've got our Foresters Enhanced product, which is, it's a little bit more money. So it's about $3,000 more. And again, we'll break that into a monthly cost. So that sounds to me is about $250 extra a month. So we're going to think about that as our investment component and see long term which is the better plan for us. So again, they're pretty close as far as premium. We know we're putting a little bit more into the Foresters product here, but at the 20-year mark, and this is the great thing, we can actually see the premium offsetting. So again, when a lot of these kind of Gen X, Gen Y clients think about retirement, again, they don't want to be increasing their expenses or paying something for life. They want to offset and stop paying that. So again, this is planned to go down at year 20, which is really nice. So again, when we look at the total cost or the sum of premiums over time, and this is again a graph a lot of clients really appreciate because they just want to know in the end what's the best cost. So again, pretty close. Again, we're putting in that extra deposit, but because we stop at that 20 years, we're actually saving money from year 28. Again, this is a really important visual for clients because if we take this client out to life expectancy, again, we're going to see, okay, we're actually saving a bit of money. And a lot of, sometimes we just simplify it to our clients and say, look, here's your cost. Which line looks better? Which would you prefer to be, the yellow or the green line? And, most clients say that's a no-brainer. Of course, I want to pay less for my insurance. Now, why do we put in the extra money up front, that extra $250 a month? Well, that's for the cash value. And again, this is where that enhanced product really shines because, again, we're adding value. So even though it costs a little bit more, if we look out at that 20-year mark, we're actually seeing here that we've recouped all of that in the form of cash value. So while we put in $230,000, we actually get back $289,000 if we were to cancel. Now again, there's a guaranteed component to that too. So if they never actually produce, we've still got that guaranteed cash value that we can show them. And again, we can also show them a reduced example. So if it goes down, we're showing again a reduced example still is quite strong. So again, that's a really nice comparison. So again, you could pay level for life and get away with the bare minimum, but for paying a little bit more in the short term, we're going to save you money long term. And again, it's not that much more. We're also going to add some flexibility. So again, if we need to put, say a tough year and we need to put the premium on hold, we can do that. We actually have the cash value to produce that. Now again, we're looking at the insurance benefit of the one plan. One would be level for life, but this one's actually going to see an uptick. So if we do hang on to this for life, we're actually seeing quite a nice upside here in sort of the life expectancy year. So there is going to be some additional insurance. Again, I think that pairs well with a PV. If you think about time value of money and inflation, that we might actually need this kind of boost later on. And again, I think this is really a strong presentation summary as well. So we're going to see, yes, premium deposit difference, $3,170 extra a year. Again, divide that by 12 to get the monthly. But for that deposit, what kind of cash do we have there? So again, if we take you out even to where the premium deposit difference will be the most, sure, in the long run, at the 20-year mark, we're going to have paid $63,000 more, again, over time. And we're going to think about that as a little bit of an investment component. For that difference of $63,000, again, not a very hard monthly manageable cost to pay, we're actually going to get $289,000. So I mean, if you think about it, would you pay $63,000 for $250,000? I know I certainly would. And again, the icing on the cake is that later on, we're actually going to be saving this client money, especially in those kind of years when they're going to look at reducing expenses and because they're going to be on a fixed income. Again, we're going to be saving that client money. We're also going to have a nice little nest egg here that they can use to, maybe they need to borrow premium early on, or maybe they just want to use it for, leveraging, taking it out, borrowing against that policy. So again, I think this is a fantastic strategy to use. Again, you can pair it with an alternative investment to see how it stacks up. We could look at things like cost per thousand, and even an IRR. And again, the one thing I really like, and I'd probably clip off this, is that we are seeing a stronger IRR at life expectancy, and especially once we see some of those sort of that additional insurance kind of jump up. So that's a concept I would use to highlight, definitely a great Foresters product there, but certainly for a client who's looking at maybe minimum funded UL, and we want to beat it on a cost basis, and we also want to add some value. And again, that's something younger clients are looking for. Now, the other thing I like about this kind of product is that Foresters offers a lot of additional benefits. And some people will say to me, well, life design analysis, it's fantastic at analyzing different products, but how do I add in some of the extra benefits that these companies offer? Some of them are ease of underwriting. Some of them are just great client service. Well, the one thing I really like about Foresters is the Foresters difference. I mean, they do a lot for the community to really enhance when you are buying a product. What I hear a lot about is that the scholarship funding is quite accessible. And I mean, again, you've got the orphan scholarships, orphan benefits, terminal illness loans. I mean, there's so many different benefits in here, so I'd encourage you to check them out. One thing, though, if you're looking to get some of this information into your LDA report is, you can actually copy and paste some of this and put it in there. So you might say, you might take the Foresters difference here and just put, something like this here. I think this is a great kind of about what they do every year, sharing their financial success. So again, I might take something like this, and I'm just going to copy and paste here, and I'm going to put it in as a report note. So this is actually going to go in the report when the PDF is produced. So I'm going to put that in as my report note, and then I might put something like to read more, visit, and I'm actually going to add a nice link to this so they can read more about those benefits and put that in there. And now when I generate the report, this kind of report note is actually going to go inside my PDF. So I can give a nicely packaged presentation to my clients, really saying, here are two different options to accomplish this permanent insurance. This one that I'm recommending, though, is actually going to have some additional benefits. It's going to save you some money, and it's actually going to have some cash value for it. So it's going to offer some flexibility that I think really pairs well with your need. And again, we're putting those additional benefits in that PDF. So when we generate it, again, the report is going to have our logo in it. It's going to look very professional. And again, clients really appreciate the fact that we're giving them some options. We're being really transparent about saying, look, here's two ways to accomplish this, but I want to show you some different things. And again, you can see that note has got in there. Every year, again, we've got the Foresters communication in there. So again, great presentation that you can use, add some additional detail, show some value. Again, try it with a few of your clients. Think about some clients of that age, or again, use our import and kind of filter out some of those terms that are expiring and show them this opportunity that they can transition to. So thank you so much for watching. If you have any questions, please reach out to me, Charlie@lifedesignanalysis.com. But much appreciated your time. Thanks so much. Take care.